Most people don't realize that buying an Airbnb for their first property is an absolute horrible idea.
Yeah, I agree. I mean, obviously I'm biased. I like long-term, more passive real estate investing, but I see this all the time with new investors that, maybe they went and stayed at an Airbnb and they're like, oh man, I paid $300 a night or $400 a night or $500 a night. Wow, that person is making a ton of money. This is great cash flow. This is a great investment. I'm going to buy it. It's going to appreciate. It's going to sound good when I'm talking about it at parties. But it is, man. I think it's a horrible idea. It's interesting that you're talking about this topic because my wife's a real estate agent and she was asking me, she's trying to list an Airbnb here in my hometown, live in a little resort town in Oregon. And like within 10 seconds, I'm like, bad idea. But I think I would say bad idea anytime someone was buying an Airbnb as a real estate investment, not just their first one, just in general. I think it's a horrible strategy. And we can get into the reasons why, but Gabe, let me ask you, if you were to pick your number one reason why you think it's a bad idea to buy Airbnbs as a real estate strategy, investing strategy, what would the reason be?
I can't give you just one reason. I have so many reasons why not to start with Airbnbs, and I've watched so many people get their ass kicked in the Airbnb space. I do think that people are waking up to it, but I think there's multiple factors here. For one, you got to buy in fundamentals. And when Airbnb really started getting big, started becoming a thing, I remember talking to other investors and I'm like, look, would your property pencil out not as an Airbnb? And a lot of people are like, well, no. But it did when people first started turning like a rental property into an Airbnb, they were doing it to maximize revenue. And I understand that. They bought a property on fundamentals that actually worked as a long-term buy and hold cash flow property. And then they took advantage of the opportunity in the Airbnb space and maximized revenue. That's one thing. What's different is you fast forward to like 2020, 21, 22, money was cheap. People were buying properties that did not pencil out on fundamentals as a long-term rental. They were buying it based on what they think they could rent it out for as an Airbnb. And so I think that's the biggest mistake. I've talked to a lot of investors throughout the years, especially during that 2020 through 2020, maybe 23, 2024 timeframe when they're buying properties and they're saying this works as an Airbnb. And I say, well, does it work as a long-term buy and hold if Airbnb doesn't work? And they're saying, no, I'd be backwards. And, the Airbnb space during that time, we had a lot more domestic travel, even to non-destination type places. And so, yeah, even though there's people in the Airbnb space that are kicking ass, there's so many factors. You have local governments cracking down on Airbnbs. You have local governments taking a piece of the pie, like they're, charging extra taxes on some of these Airbnbs. And the fact is people just aren't domestically traveling as much either, and that's where I think, the biggest mistake is people are also on top of all that, people are over, developing these properties. The Airbnb space is, oh gosh, what's the word I'm looking for? Very competitive, right? Like it's all based on ratings. It's all based on good reviews. And you have so many properties to choose from. I think people that say they're getting pickier and pickier, right? And so it's like people have to overdevelop these properties. They put a shit ton of money into the property itself. And then they're also having to like completely, put new couches and all this other new furniture and TVs and top of the line, everything. Yeah, they're paying all this money just to get this property perfect, to get these good reviews. So they're spending a lot of money on the front end. And then if it doesn't pencil as an Airbnb, then they have to go back to a long-term rental. And all of a sudden that property just doesn't pencil that way. And then they can't sell it for what they paid for it because they overpaid for it because they bought it as an Airbnb and not as a long-term rental.
Yeah, I could just unpack that over and over again. Building a strategy around relying on the government to not mess with you is a really bad strategy. I saw that, again, I live in Hood River, Oregon. It's this little resort town, really beautiful. And there were a lot of people buying up Airbnbs here. That was their business. In fact, there was a property management company that specialized in Airbnbs. Someone would come in and buy 4 or 5 Airbnbs. And then the city came and said, nope, you get one. And it can't be a residentially zoned Airbnb. Destroyed all the Airbnbs, and all these people, like you said, that overpaid are sitting there not only with a property that they can't do much with, it's actually costing them money every month to pay the mortgage, because like you said, they overpaid. In fact, I saw sellers selling their Airbnbs like they were selling a commercial asset. They were selling it based on net operating income. Oh, my value is this because it's a nice house in a nice area and it cash flows X per month times 12 divided by a cap rate. It's valued at this. And I'm like, bullshit. It actually isn't valued on that. You bring an appraiser in, you bring a bank in. If you need to put new debt on it, or if you're going to sell it to someone that needs to go get debt, it will be appraised exactly like a single family home, the market comp approach. They're going to look at houses around it. They're going to look at the value, the upgrade, subtract, add, square footage, boom, that's the value. And these people they were valuing these things completely in an unorthodox manner. You can't do that. And so, yeah, these people are sitting on all these houses now that are all hemorrhaging and they're completely screwed. In fact, we have people in our elite mastermind. I know, Brenna, who's awesome. She's crushing it. When she first got in, that's what she thought. She thought I needed to buy Airbnbs as an investment strategy. She was getting her ass handed to her. Luckily, she's exited all of those now, made some smart moves. Now she's buying mobile home parks and doing really well in that. So yeah, I mean, I have a whole list. I have a whole litany of reasons why you shouldn't buy Airbnbs. But I think the number one is, man, you're relying on the governments. And especially in some of these blue states, or not even blue states, the whole affordable housing thing is crushing people, and Airbnbs are an easy target.
Well, and I think part of it is people were able to get loans because they were buying Airbnbs with DSCR loans based on the Airbnb rates that they were getting, based on short-term rental rates. But then to your point, when it got, a couple years go by and now they have to refinance that property, and that property, like whether it's through local government saying, hey, you just can't have this as an Airbnb. So now it's backwards in terms of rent. It also puts it backwards in terms of value. So if they're basing the value on the NOI, like a commercial property, but then that NOI never gets realized, or maybe it did for a year, where you realize, hey, I don't live in a destination place, or I live in a destination place that says, hey, you can't have these residential homes being used as Airbnbs. Now you're at the mercy of the market. For one, the property doesn't pencil because you never actualize the NOI that you thought you were going to get from it being an Airbnb, which then drops the value down. So if you got a DSCR loan based on let's call it the commercial value of the property, based on the income that you believe this property was going to produce as a short-term rental, and then, oh shit, that didn't happen, then yeah, now you're completely at the mercy of the market. You overpaid maybe whatever, a couple $100,000 more. So not only are you like getting less rent than your monthly payment, not only can you not cover the debt service, now the property is worth far less than what you paid for it because you overbought the property. And now I'm seeing all these Airbnb owners saying, oh, now we're getting into boutique hotels, right? And so I find that really interesting. I'm always cautious when I see a large group in any industry just jump around and shift. I've been buying buy and hold cash flow properties. Now, my asset classes have changed through the years, but I've been buying buy and hold cash flow properties that work on fundamentals. They work on the day that I buy them, right? And I think that hedges my risk. That puts me in a position. I don't have to worry about these daily rates or hey, if I can fill this property 50% of the time during the month. Like to me it's risky, and I think there's risk. Now I'm seeing all these Airbnb folks saying, oh, it's boutique hotels, and so I'm curious. Is the same thing going to happen with boutique hotels? All these Airbnb operators are now going, well, this worked for a little bit, now it didn't. So instead of buying this one Airbnb, I'm going to go buy this 10-unit boutique hotel. Well, they're also competing with the big guys, and they're also competing with, all the big hotel operators. And so I actually see that risky as well. Like that's also short-term rentals. It's just like having 10 Airbnbs instead of one.
If you like what you're hearing on this podcast and want to come and hang out with us, as well as other members who are scaling in cash flow real estate, you've got to check out our elite mastermind. Inside, we've got investors who own hundreds of millions of dollars in real estate and are doing amazing things. We'd love for you to come join us. Click the link below.
Well, I could tell you that it's not, will it happen with boutique hotels? It has happened with boutique hotels. We made a cardinal mistake. We buy mobile home parks, but then there was there's a 10-unit boutique hotel on the river, beautiful. We bought it, and the demand for these types of assets or these types of experiences has definitely gone down. I think, to your point, there was a huge bubble during COVID. I mean, you kind of had a perfect storm in the right way when people were buying these things. Interest rates were really low. You could go, maybe if you didn't do a DSCR loan, you could go use more of a traditional Fannie Freddie. Rates were 3%, right? There was just an influx of travelers there's a huge demand for these types of, Airbnbs or boutique hotels, talking Airbnbs. These people buy them, even though they might have bought them on good rates. The revenue's been cut in half in some of these places. And there's certain parts of the country, I'm thinking of like the Smoky Mountains, where you could go pick up what was an Airbnb for, 50 cents on the dollar now. And so think about the person holding that home, trying to sell this thing now as a single family house. And I don't like investing. This is why I struggle with the stock market too. I don't like investing in assets that I can't control the outcome. I can't control the exit, right? And with a 5-unit or larger residential property, apartment building, mobile home park, triple net industrial, self-storage, et cetera, you can actually control the net operating income. You can raise rates, you can lower expenses, you can have a clear path to increasing value in that property. Whereas in a lot of these Airbnbs, you have no control. You have no control over what the government's doing. You have no control over what the demand for Airbnb experiences are, right? You have no control over what the value of houses, the true value of these homes are, which is based on a market comp approach. So you're just kind of gambling, I think. And it's dangerous. I think I think people can fall victim to making emotional investing decisions with Airbnbs, right? Oh, it looks good. It's got a great view. I love the quartz countertops. The stainless steel is fantastic. This is a beautiful property. People are going to love it, right? People are going to love it. They're going to come stay. And when you are making an emotional buying decision when it comes to investing, you talk yourself into it by omitting things in your brain, like expenses. And this is the same exercise I went through with my wife. She's like, this thing's $1 million. It's a loft style. It's beautiful. It's got, views of the river, but it's like 1,300 square feet. They want over $1 million for this thing. And I'm like, well, okay. People don't understand how much it costs to manage an Airbnb. I mean, Airbnb, just the platforms themselves take a shitload right off the top, right? I don't even know what the rate is. Is it 20, 30% right off the top?
I mean, I've heard upwards even of 40% sometimes, but that is a common thing. Like you'll have real estate agents, especially on the residential side, go, "Well, this is such a great investment," right? And I'm always like, "No, it's a cute house with a great front porch," or like this. "Oh, great river views, great property." Like that doesn't make it a good investment. Like there are a lot of amazing properties that look amazing that aren't a good investment. It may be a sexy property, but what I think sexy is the numbers and the cash flow, not the cute front porch, not the river view, not the vaulted ceilings. Like it has to fundamentally make financial sense to buy the property in order for it to be an actual investment property. And the same is true in the commercial space. I thought that would change a little bit as I shift into commercial properties. And same thing, you get agents and brokers going, "Oh, this is such a great investment." And then it's like, yeah, if you put $1 million into this, and if you can get to rents up to this, and if you can decrease expenses by this, then it's a great property. But I'm sure as hell not paying what you're asking because of the maybe upside potential that it could be, right? And so I think it's, is it a good investment? Well, that's in the numbers. That's not in the front porch. It's not in the view. It's not in the vaulted ceiling. It's in the numbers.
Well, the numbers are important. And if you're talking yourself into something, I was even right off the bat, I was asking my wife, I'm like, okay, what does Airbnb take off the top? Boom. Where's management? She's like, oh, she sells, she rents it. They rent it like 270 days out of the year. I'm like, yeah, that's a lot of work. Are they managing it themselves? Yes. Okay. So by the way, that's not passive. That's actual, you're running a business, right? I'm like, what about cleaning? What about turns? She's like, oh no, oh yeah, I guess cleaning is a lot. I'm like, what about maintenance? She's like, well, there's not a lot of maintenance. Dude, you have 100 people stay in your property throughout the year. There's going to be maintenance. They're going to throw parties. They're going to drink too much wine. They're going to spill shit. They're going to break things. They're not going to treat your house well. So, and then once I just kind of ran through like Airbnb fees, right? Let's talk about taxes, property taxes, obviously the cost of debt. Let's talk about cleaning. Let's talk about maintenance. All of a sudden, this $1 million property that she thought was great, and my wife's a brilliant real estate agent. She's really, really smart. She was like, oh yeah, you're right. I'm like, if you want to sell this house, what you probably should do is sell it as a second home. Someone that lives in Portland, an hour away, they want a vacation destination, and they're okay buying a second home because they have the money to do it, and they can use it as an Airbnb to augment and offset the expenses of owning that property, and they still have access to it. I go, market to that person if you want to sell this house. Don't market it to somebody that wants to buy it as an investment. And so I don't know, just like running through that exercise in my brain, I'm thinking, man, these people that think getting into Airbnbs is a great idea right now as an investment. I mean, we started this episode off as your first investment. I don't think it's a great investment as your second, third, fourth, or last investment. So, like you said, buy in the fundamentals. Buy on fundamentals, by the way, that you know are true and that you can control. And then that's a good investment thesis. Not, I'm going to put money into this thing and pray.